Welcome to the NFT Finance Podcast, sponsored by Goblin Sachs. My name is Terry, and I'm once again joined by my co-host Thomas. Today, we welcome Martin and Georgi, founders of Metaquants, a one-stop solution for NFT valuation and risk management.
Hey guys, welcome on the show. Really appreciate you being here. I think, let's just jump in with what were you guys doing before you got into crypto? How did you get into crypto and NFTs specifically? And then we can jump into a little bit more around the ideation around Metaquants.
Yeah, okay. First of all, thank you for having us. So I'll start. My name is Georgi and I'm the technical co-founder of Metaquants. Prior to this, my background is in machine learning. This is what I studied in university. Then I had two positions as a machine learning engineer. First, in a computer vision startup, which was related to football analytics. Then I worked in a late stage startup in Bulgaria, which provided NLP solutions to companies such as Dow Jones. And in the meanwhile, I have always wrangled with some data regarding crypto investing, creating my portfolio, but nothing too fancy. And then last April, Martin can maybe tell a bit more how we entered NFTs and how actually Metaquants was created.
Yeah, thank you, Georgi, for the introduction. Thank you also for inviting us here, guys. My name is Martin. I'm the founder who is focused more on the business side of Metaquants. In terms of my crypto and NFT experience, I'm in crypto since more or less 2018. Back then, I was researching different upcoming protocols. Obviously, back then it was more about the Asian ecosystem, different wallet solutions. Eventually, I managed to write my thesis on the topic of NFTs and how they relate to ownership, real-world assets. This happened at the end of 2020, beginning of 2021. In terms of my professional experience, I've had some experience as a data scientist at Procter & Gamble, also in the energy domain. But once I got more fascinated about crypto, I also started my professional journey in DeFi. I worked at Signum Bank, which is one of the first regulated banks for digital assets. There I was doing DeFi and custody for a short time. Eventually, I also become part of Melts as a DeFi strategist, which is a non-custodial lending protocol. And ever since April last year, Georgi and I have been focusing on Metaquants, building the analytical infrastructure for NFTs. So thank you again.
That's awesome, guys, and really appreciate the intro. I guess let's jump into around the let's get into how did you guys come up with Metaquants? How did you guys start working with each other? Maybe a little bit of background about Metaquants as well.
Absolutely, Ryan. Thank you for the question. So Metaquants, firstly starting with the introduction about the company, is an analytics platform for valuations and risk management for NFTs. We are huge proponents of the NFT financialization narrative, and that's why we are exploring NFTs as an alternative investment asset class. How we actually started is quite interesting. Last year, I found out that Nexo, who are based in Bulgaria, are organizing a hackathon on the topic of NFTs x AI. When I found out about it, I directly reached out to Georgi and invited him to participate with me in this challenge. So eventually we were also backed with another person who was working with Georgi. We went to the hackathon and we managed to create the best prototype of a working machine learning algorithm that can estimate the price of NFTs. So essentially, that's how we started. It emerged from the need of Nexus NFT lending business. They were looking for a price discovery tool that can be accurate, but at the same time also interpretable. So after securing and winning this competition, Nexo provided us with a grant So we had the whole summer to experiment, do our research, and eventually we managed to provide our first MVP in September. So in general, that's how we started. Up to this moment, we have rolled out a bunch of interesting solutions out there, but I guess we're going to focus more on them in the next questions.
Yeah, I mean, let's just jump into kind of what solutions you guys offer, and then we can get a little bit deeper into some of the protocol and data pipeline.
Yeah, absolutely. So I'm going to provide you with the high-level overview, and Georg is going to get a little bit more deeper. At the moment, we have two flagship products. One of them is a collection floor price API, but it can also be accessed by different decentralized applications via an Oracle. We're working with API 3, but also able to provide this data via Chainlink. On the other side, we've just launched our NFT pricing algorithm, which is essentially providing you with a point estimate of an individual NFT in real time, which can be leveraged by various liquidity providers, NFT lenders, institutions, insurers, as well as funds. Right now, we are working on our upcoming product, which is an NFT terminal. You can think of it as Bloomberg for NFTs. There, we're going to provide various insights and information regarding the NFT lending traffic on the biggest dApps, as well as marketplace analytics, individual level and NFT valuation, risk management tools, and much more. So that's the high level.
Awesome. Let's jump into, I guess, maybe some of the data pipeline and how you guys value NFTs. I know there's three components. There's the data ingestion, the wash trading detection, and the valuation algorithm. Maybe let's just start with a high level overview, Martin. I think that'd be great, and then we can get into a little bit deeper questions.
Yeah, absolutely. But I guess here I'll give the stage to Georgi. He can dive more into these details since he's the one building the product.
Yeah, thank you. So regarding the pipeline, I would say that the first step is basically data ingestion. For now, we are using a third-party data provider, which is called Zash. They're backed by Binance, and we rely upon them because it's difficult to index all the data from different sources, and we don't have the resources to do that internally yet. Then once the data is ingested, it goes through wash trading filters, which can be seen under different forms. One type of wash trading we are doing is graph encoding of transactions. This way we can flag different patterns of trading. Then we also have wash trading detections, which are connected to self-financed accounts and accounts that have been financed by the same end address, of course, excluding central exchanges and Tornado Cash. And in general, trying to cluster entities so that we can easily recognize two or more parties which are involved in malicious transactions. And once we do that, we basically input this data into the valuation algorithm, which has several differentiators to our competition. First of all, it's not only NFT related data, but also market data related to major ERC20s, and also general market conditions through indices such as S&P 500, Dow Jones, and even taking the Fed rates. And this way, we are able to develop an algorithm which penalizes over predictions more than under predictions, so that we not only optimize accuracy, but also optimize customer profitability, because we don't want to overvalue. I mean, it's worse to overvalue than to undervalue, at least in my opinion. And this is kind of how technical overview of the pipeline.
Awesome. And let's jump into wash trading detection a little bit. So for our listeners, and I imagine most people are kind of familiar with wash trading, but how does, what, first of all, like high level, what is wash trading, and how does wash trading detection at like a very high level work?
Okay, so I mean, if we have to go by definition, I would say wash trading can be defined as a series of transactions between two or more parties with the aim of manipulating the market in order to extract personal gains. And in the NFT domain, it got pretty common, I would say, with different airdrops on newly created marketplaces. This is when a lot of attention was had been brought to it, and on a high level, what we try to do is we try to see different, based on what's already out there. We are trying to replicate some malicious behavior, trying to see where the NFTs are coming from, where they are going from, and if they circulate, for example, between several addresses, this can be a flag. Other flags include multiple buys or sales from the same address and things of this kind.
And I guess like from a technical perspective, how are you currently like flagging wash trading?
From a technical perspective, for all transactions, we are doing graph encoding of the tabular data so that we can track the path of an NFT. This is one of the ways we are tracking them. Then we also use data from different ERC20 so that we can map them to addresses and see how these addresses have been financed. This way we can create entities. Of course, in doing so, we should exclude central exchanges and Tornado Cash so that we don't have false positives. And yeah, that's it.
Interesting. And now I know like there's different levels of sophistication with wash trading. How do you guys like stay on top with like kind of like the latest like what people are doing, kind of like the latest like wash trading tactics, and yeah, how do you guys like bake in new tactics into your model?
Yeah, so mainly we rely on academic research. There are more and more papers that emerge in regard to wash trading. So we are trying to delve deeper in those and implement them from an engineering perspective, so that we can execute them in a quick and reliable manner. And of course, apart from that, we are also trying to keep it as simple as possible, because one of the main problems with detecting wash trading is that there are a few ground truth cases which you can rely upon when developing a methodology. So what I recognize as wash trading is not actually what you might recognize as wash trading. So we are trying to give the end user the ability to choose his thresholds and what type of wash tradings to be detected, so that we don't impose our industry beliefs on our end users, and basically they can say what the ground truth actually is.
Let's jump into the like valuation algorithm that you guys have built. I know you guys collect a variety of data, and specifically, you collect some macroeconomic as well as like NFT industry condition data. Can you jump into why collecting that data is important? And I'm not too sure if this is like a differentiator for you guys, but yeah, maybe just speak to a little bit about some of the data you guys collect, why it's important to your modeling, and what type of weight it gets within the models.
Yeah, of course, from an inferential point of view, we've seen that these variables concerning industry conditions and macroeconomic conditions have predictive power. Of course, no, not all of them, but we do forward variable selection so that we can use only the ones that actually contribute to the end results. And from a descriptive perspective, there are a lot of empirical evidence in regards to correlation between NFT floor price data and major ERC20s. And it's not uncommon, for example, to hedge your NFT holding with opening a short position on it. So there is definitely correlation between these two, and it has predictive power. We have tested that using some lagging indicators so that we can model cause and effect. And then on a macroeconomic level, the state of the economy determines the circulation of money and the consumer's propensity to spend. So, for example, when the economy is in a bad state, people are less likely to put money in volatile markets, which in turn results in lower volumes of NFT sales in the NFT industry. And encoding these trends allow you to see how premiums on floor price change for different NFTs.
What are some other pieces of data that you guys collect? Like specifically to like NFT collections, and how does I know you guys are pretty granular about how like the pricing of each NFT is kind of like calculated. So I know you're descriptive on like what moves what. What are some of the largest, I guess, like let's just say it's like a Bored Ape, right? And let's just say maybe a mid-tier Bored Ape. What are some of the characteristics of the NFT that like really move the needle when pricing these things?
Yeah, so I would say one really big differentiator is being able to encode in an efficient way the information about each trait of this, let's say, of this ape. So if you have, let's say, 6 traits for this ape, and we have seen that, for example, the rarest trait of these several traits influences the price of the NFT the most, especially if it's non-floor price. And I think this is one big differentiator between NFTs, what their rarest trait is. Of course, then there are certain corner cases where you can have 2 or 3 rare traits combined. But doing rarity encoding instead of just using some out of the box metric for rarity, I think this is how you're able to differentiate between different tiers.
And how does like the Metaquants like modeling differentiate between the competition, and how does your performance kind of stack up versus some of the competitors?
I think Martin can take this one.
Yeah. Speaking of our differentiation points from the competition out there, we can actually outline 3. The first one is on the algorithm side. We put great emphasis on interpretability. This means that every single feature that goes into our model is going to be displayed, and we're going to provide its contribution to the final estimate in absolute ETH or USD terms. Furthermore, as Georgi has already mentioned, we are penalizing over predictions more than underestimates. This is especially useful for the NFT lending side. By doing so, we ensure that they're not going to risk more than they would like to. So this essentially is, to a certain level, a risk framework. Furthermore, we are providing a risk score that is based on a confidence interval. So given the risk appetite of the user of our algorithm, we can basically adjust our estimates to a lower or an upper bound. And this essentially would be a great use case for an investor who is willing to risk more but generate higher returns, or as I have already mentioned, a lender who is willing to hedge and ensure that he's not providing more capital against an NFT. The second point is our Metaquants NFT terminal, which we are currently in the process of building. It would allow institutions and private investors to get a thorough overview of the NFT market, not only on a marketplace and on a protocol level, but also on an individual NFT level. So there, we're also going to provide insights regarding the traffic on the major NFT lending protocols, and also give investors the capability to just go there, provide their token ID of the NFT that they're willing to purchase or they own. And eventually, we're going to provide them with a great bunch of analytics around it. Lastly, which is actually not least, is the fact that we're collaborating with various NFT finance builders in different verticals, such as liquidity provision, perpetual DEXs, AMMs, and NFT lenders. If I can name some of the partners, those would include Protec, the perpetual DEX Tri3, the automated market maker EasySwap, and of course, Nexo, who are an NFT lender, but also a non-custodial wallet provider. We're going to integrate our APIs there as well. This close collaboration allows us to do quick iterations and create tailor-made solutions. So eventually, we are in direct communication with those players. They tell us what they're missing, and we can easily either build it or provide it in our pipeline. So as a wrap-up, those three things are what differentiates us most than the competitors.
Awesome. That was really helpful. And you did mention the NFT terminal. I think you mentioned it earlier in the episode as well. So basically what I'm envisioning in my head is essentially like a Bloomberg. Maybe you can give me a little bit more insight on to what it kind of looks like on your end. If I'm a user going to use this, what are some of the use cases that me as a user would go and experience, and then also timing around launching the terminal itself.
Absolutely. Thank you for the question, Ryan. Essentially, as you just said, it can be thought of a Bloomberg for NFTs that could be used by various players, not only institutional investors, but also NFT flippers who are willing to generate some alpha out of using our platform. More or less, the homepage, you can think of it as a terminal where we provide different statistical, inferential data for marketplaces, what is the worst trading on them, as well as the total borrowed amount on Pine or NiftyY, NFTFi, as well as number of liquidations, so on. We're going to aggregate this information more on the quantitative side, but also provide news feeds, internal research, as well as interesting sentiment analysis and Twitter threads that may have some impact on the market. Then you can also imagine that we're also going to have a screener where every single collection that we are supporting is going to be provided. We're going to get interesting data such as floor prices, percentage change, total volume, as well as information like top gainers and top losers. Lastly, whenever you click on a protocol or on a collection level, then you're going to be provided with more data. On a collection level, you're going to see the wash trading that is provided there, as well as some sentiment data like number of users on Discord, Twitter, and so on. This is going to be developed with time, and we are going to continue focusing on the sentiment side of the NFT collection. And this is also part of our roadmap in the long term. Furthermore, on a collection level, you'll be provided with the opportunity to have this pro trader-like experience where you can select the different trades either on a you can actually get information such as floor price on the trade level, but also floor price on the collection level. And as you can see, the UX is just going from the bigger picture to the individual level. So once we go through the collection level, we can even focus on single NFTs. There you can, of course, see any information related to its activity, listing, market depth is something that we are also exploring. And I think that's a good wrap up of how we envision this to happen. Lastly, on the rollout of our products, we're going to provide the beta for the NFT terminal by the end of Q1. So stay tuned for it.
Yeah, maybe I can add a thing or two regarding how the collection level will look like. Apart from what Martin already said, we are going to do this feature which is Bloomberg-like, where, for example, you have some sharp decrease in the case of Azuki in the beginning of May when they released that the founder is rug poor, and there is a sharp decrease in the price. So we are going to index those events. So when you click on the candle, you'll be actually able to get the news related to that event. I think this will be extremely useful. What we are trying to do is basically encompass all the existing information about the collection in one single place, including crawling different NFT newsletters, and also providing you a page where you can basically see all loans regarding this collection. For example, you go on the NFT Finance page for Bored Apes, and you can see the addresses which have been liquidated most times, how these liquidations have happened. You'll be able to see outstanding loans, what's the health ratio for peer-to-pools, what's the duration for peer-to-peers, which are the biggest lenders, which are the biggest borrowers, for example. You'll be able to see different statistics on an address level. So if you're going to provide some money for an NFT on, let's say, NFTFi, you'll be able to see what the holdings of this address is, how many times he has been liquidated in the past, how many outstanding loans he has currently, what's the health ratio of these loans, when's the loan duration ending in case of peer-to-peer. And basically, you'll be able to draw a full risk management picture for whether to lend or not.
This is great, guys. And let's talk about really quick the data reliability with the Metaquants data and then the API endpoints that you guys provide. Could you guys speak a little bit to that?
Yeah, can you specify what you mean in terms of reliability?
Yeah, I guess really around like uptime and how often. I guess maybe let's start with the API endpoints and how often you guys like. Does the data stream in like real time, or how could I essentially I guess procure like the data on a user perspective?
Yeah, okay. So regarding the API endpoints, currently we support 3 endpoints. We have the real-time floor price endpoint. Then we also have historical floor price endpoint, and then we have the individual NFT appraisal endpoint. We have in our pipeline to also add historical appraisal endpoint, so that you can do, for example, tax filing and P&L. Moreover, by the end of this month, we are also releasing a new endpoint where you'll be able to type in an address and see all of his NFT finance history, how he has interacted with different contracts. And then also we are going to release an endpoint where you'll be able to see how the performance of different NFTFi protocols.
Awesome. And then as far as reliability is more a question around like what uptime do you guys kind of like strive to maintain?
We are updating, depending on the endpoint, we update on different time intervals. For the floor price API, it's basically streaming. And when we support both streaming and on an hourly update level. Then for the collection level, currently we update it once every 24 hours as we are just beginning, and upon demand we can update it even hourly if of course there is demand for that. And then on NFT file level we are updating every 12 hours, but as I said, everything is on demand, so it's not a problem for us to update as frequently as possible, or even making something a streaming endpoint.
Awesome. And let's zoom out. How do you guys see NFT finance progressing over the next 12 to 24 months?
Yes, absolutely. It's a really interesting question. I believe that at the moment we have a really solid foundation when it comes to the NFT finance products like peer-to-pool, peer liquidity providers, and so on. However, I believe that the lacking infrastructure, the analytical infrastructure, is the bottleneck that holds the development of mass derivatives markets for NFT financialized products. That's the reason why I also think that once we build this infrastructure, perpetual dexes will start introducing forwards contracts, and eventually such derivatives contracts would be tokenized. This would be great because eventually this would create a bigger secondary market, which is going to thrive. Of course, as the Web3 space is getting more and more regulated, we're going to see many real-world assets, especially on the illiquid side, being brought on-chain. This could happen via NFTs. And eventually, this would also be part of the NFT finance narrative. It would also need analytics, and that's why we are positioning as this go-to NFT analytics solution provider.
Awesome. And guys, is there any way for our listeners to get involved with the project? How do they get in touch and follow you guys?
Yeah, absolutely. We're at this stage of our development where we have already launched some of our flagship products. We have clients, and we are also expanding. We feel like that this is the right moment for us to scale, and that's the reason why I would like to announce that we are also launching our seed rounds. So any investors, if you have interest in NFT finance, please reach out. Furthermore, we are constantly on the lookout for smart people who can work with us. We're looking for partners from the NFT finance domain. And this is my call to action for everyone. Just reach out on Twitter. Our handle is at Metaquants. Also on LinkedIn, my name is Martin Palazov. We're always open to chat, so reach out directly, and we will be glad to discuss any potential synergies.
Awesome. Guys, thanks a ton for your time today. And listeners, go ahead and check out metaquants.xyz and follow them on Twitter at metaquants_. Thanks a ton.
Thank you, guys.
Thank you.
Follow me on Twitter. I'm 0xTayTayHoho on Twitter. That's Tay with an E. And you can follow Ryan at _Helmass.
Yeah, and that's _HELMASS. Thanks everyone for tuning in, and we'll catch you soon.